Hello everyone, welcome to Elliott Wave YouTube channel. This is Henry and today is Tuesday, March 21st. The time is around 2:45 a.m. GMT. Today we are going to look at the chart of S&P. This is a 60 minutes chart. We can see it has ended with 2 in the intermediate degree here at 41.94. So that means we are currently within wave 3 lower, and within the wave 3 it should subdivide into 5 waves. So that's why you see a 1 2 3 4 5 ending with 1 of 3, right? This is the minor degree, and then now looking for a 3 rally in the form of an ABC zigzag to finish with 2 in the minor degree before it continues to go down. So it should continue to go down in the wave 3 and the 4 and the 5 before it finishes with 3 in the intermediate degree in the blue color here. So you can see in the right side is lower in the red color. That means the bias is to the downside, so we don't like therefore going long when the bias is lower. And if this really plays out according to what we are looking at here, so approximately in the rally it should fail at the approximately 100% extension to 161.8. So this is a potential area where this wave 2 can end between 40.30 and 41.10, and then from here we can then continue to go down again. Okay, so that is the update for S&P. Looking a little bit, zooming out a little bit to get a little bit of a broader context. Here is the daily time frame. I will copy wave 2 in the blue right here, and then I will copy in the wave 1 over here. So this is the daily time frame. So you can see from the daily time frame so far, what we see here is the rally from the lows in October last year. This one is a very clear 3 waves. So that is indication that this rally so far is corrective, right? Because if this is a bullish market, you would have expected a 5 waves rally from the lows as an impulse, but no, this is only 3 waves, so it is a corrective structure. And then the decline from here, we are calling that to be a 5 wave. So now this wave 2 is going to be the invalidation level from the bearish view, and as long as we continue to stay below wave 2, then any rally from this wave 1, which is what we are looking at here, a 3 years rally, should fail, and then it continues to go down again. Now technically, for the real confirmation that the bearish view is correct, you have to break the previous low, right? I mean, that's the only way we get confirmation, and this is the previous low, but that will take some time before the confirmation is seen. So for now we are taking the more aggressive view and calling for the downside against this previous peak on the February the 3rd. Okay, so for further updates on the S&P or any other indices, stock, ETF, Forex, cryptos, commodities, feel free to check our service. We have 14 days trial, and the link is in the description of the YouTube video. I'll see you all again next time, and have a nice day everyone.